Hello everyone, Joe Vitale, American Retirement Advisors with this weekly market summary for the week ending February 14th, 2020. U.S. market and fixed index markets were closed yesterday for President's Day and are down a little today with still fears of the coronavirus and how it's infecting the markets. Let's talk about stocks from last week. Equities rose across the world, most of the world. Last week was better economic news in the U.S., so the S&P rose 1.65%, and the Russell 2000 added 1.9. The NASDAQ increased 2.23. Emerging markets rose 1.37, while the international, the EFA, was down slightly 0.02. Within the U.S., growth stocks once again outperformed value stocks. Real estates and utilities were best performing sectors, while financial and consumer staples lagged. Fixed income securities were flat to slightly down as interest rates were modestly down in the short and long maturities, but unchanged for the benchmark 10-year treasuries. With commodities, the oil prices advanced 3.4% last week to $52.05 per barrel for West Texas crude. This is the first weekly rise in 6 weeks. They've been pretty much low for the last 6 weeks. Reports of stronger demand out of China eased concerns about a slowdown in demand and economic growth as a result of the coronavirus. Economic news, mortgage application index rose last week as purchases stood 16% above the year-ago level, with refinancing rising 207% on a year-over-year basis. Warmer than normal weather across most of the country likely pushed the growth rate higher. The average 30-year mortgage rate was 3.72%. Now, new unemployment claims rose by just 2,000 versus expectations for a 7,000 increase. So on a 4-week moving average, jobless claims are unchanged from the last week's 212,000, which has been the lowest level since July 4th. So inflation, excluding volatile food and energy, rose 2.3% over last year, a tick ahead of expectations. This represented the largest gain in more than a year and can be attributed to the higher costs of shelter and medical care. Consumer sentiment, as reported by the University of Michigan, was very strong across all political parties, with both Democrat and Republicans more optimistic about the prospects of the next 6 months on a year-over-year basis in total. The Consumer Sentiment Index came in at 100.9 for February, ahead of the prior month and consensus expectations. So let's talk about company news. Crown Castle Entertainment, which is a G50 holding, it's a communications tower real estate investment trust, which rose in unison with others in the sector in reaction to the court's decision to approve the merger between Sprint and T-Mobile. Shares were up 10.3% for the week. CNA Financial, which is a G50 holding, reported earnings that exceeded expectations for the insurance company. Management also announced 5.7% boost in its dividend. So shares now yield 2.8%, and the shares rose 7.5% for the week. Chart Industries, a G33 and Core Select holding, reported bookings at the end of the fourth quarter were ahead of expectation and raised guidance versus estimates. So shares rose 16% last week on the news. And then Nestle SA, a G40 holding, reported stronger than expected core growth in revenue and earnings, driven by the robust momentum in their U.S. key market, pet care globally. So earnings and free cash flow grew 11%. As always, feel free to give us a call or email questions about any markets or any concerns. You know, the market is volatile, so it's better to be allocated properly to make sure, regardless of volatility. You know, we're having people say, "Oh my goodness, how did I lose money last month? The market was down a little bit last month." Well, you know what? That's what we just talked about. The core, the value didn't grow as high as the growth stocks. So it changes, it's volatile. So make sure you're always properly positioned for volatility. If you have any questions, feel free to give us a call, 855-756-5700, or online, aradvisorsinc.com. We look forward to seeing you next week, so God bless you. We'll see you soon.